Welcome to the ARMR Report, ladies and gentlemen. Thanks for joining me on a Saturday for the week in review. This is a show about stock market investing. What I do is I share with you the ARMR investing way. It's a strategy I've been building over 30 plus years of doing this. And when the cornerstones are basically three simple steps. We build our whiteboard. We do a lot of research. We've been doing a lot of that on the ARMR Slack trading desk this week. So I'll go over some of the stocks that were elevating to the top of our whiteboard, looking for entry points, what you might call stocks to watch. But what that really means to me is, what stocks do I want to buy when I get the right entry point? And these stocks are coming down towards levels that get very interesting. So we were on conference calls this week. I'm going to share with you some of those ideas. The second step is to use algorithms to determine our risk posture, when to add risk, when to take it out. So we're risk monitor red. We've been that way for a couple of weeks. Market had a nice close to the week. So we're going to look at the algos, look at the indexes, and try to figure out, will the stealth bear market that's going on since February, where we see the ARK funds, just as an example, down 40% from the highs of February, will that decline suck the big indexes lower, or will the 25% increase in the S&P this year eventually spill over and you'll get that wicked snapback rally in the innovator type of names? That's what we're going to talk about. And then, of course, we always wrap it up with a discussion on stop losses and protecting capital. That's really what stop losses are about. A lot of guys on YouTube, or most people you see on CNBC, they're always talking to you how much money you can make. What a great idea this is. It's going to go to the moon. And in all seriousness, when it comes to managing your own capital, step one is to protect capital. Step one is to stop your assets from dropping 50% because you're way over your skis on margin thinking an idea is going to go to the moon. If you can stop doing that, you're going to have a great 2022. So you've got to put those three pieces together to create an investment strategy that works for you. I'm going to try to share, my successes and my failures with you. Keep it real here at the ARMR Report. And over time, I hope you'll be able to build your net worth in a meaningful way while reducing downside volatility. That's the point of the show. So before we dive in, don't forget, this is how I run my own personal capital. I'm not telling you what stocks to buy. I don't know you. I couldn't possibly give you advice on your own personal portfolio. So I'm sharing with you my experience, information I've gathered that will affect how I trade. And then, of course, you do your own due diligence to see if it suits your risk tolerance and the goals that you're going after for your portfolio. If you want to subscribe to the YouTube channel, right down here, you can do it. Don't forget, you can subscribe to the ARMR Report if that makes sense to you. The like button, totally up to you. If you like this, go ahead and smash that button. That would be great. Information, if you're looking for the ARMR Report, info@armorreport.com. You can always do that. Right up here is a free ARMR Report. You can subscribe to that, just a simple ARMR Report. Usually what I do there, I'm usually during the week sending out emails in the morning, giving you some thoughts on how we're positioned on the ARMR trading desk for that particular day, right? So thoughts on how we're trading is what I send out. If you find that interesting, you might want to subscribe. All right, let's dive in. Step number one, and don't forget, I'm going to get to your Q&A at the end. So in the message board there, feel free to load it up. And then at the end of my comments, I'll go back and we'll just start going through the Q&A. So first thing I want to talk about before I dive into what stocks are at the top of our whiteboard and what research we're doing that reveals some really compelling stories, and really compelling stories on stocks that are getting destroyed right now. That's the time to do the research. So when they bottom, you're already ready to take advantage of it. Okay. So I don't really like to do a lot of research on a stock that's up huge. In fact, I usually won't, because as it's running, I don't want to chase it. So if I do the research, I get so excited, I run out there and buy it at the wrong time. So I wait for a stock that I love to get cratered. Then I start really doing the research, make sure I still love it. Then I capture that upside. So I'll get to that in a minute. But let's start with the topic of the day. We've got a stealth bear market. You can't argue with that fact. There are so many quality stocks getting destroyed in the last 6 months. Without a stop loss discipline, my year would be disastrous right now, because the ARMR Whiteboard is full of innovator names. It's what I love to invest in. Those are the type of stocks that have made me the most amount of money over my career. And I'm always going to invest in those names. But you got to have stop losses to protect yourself so you don't have that 40 or 50% drawdown because your portfolio is out of favor. Okay. So the big question of the day for me that I'm trying to figure out is, will the hollowing out of the stock market lead to a breakdown in the big indexes over the next X amount of weeks and months? Or will the big index levitation drag the rest of the market up? So let's go look at a couple of charts, try to think this through. There's the S&P. So we have risk monitor green here, risk monitor yellow right at the top, red right here, and we're still red. So that's the first order of business today, is that we're still risk monitor red. And I know that may be confusing to some people. Well, the market's had a big up, week. A big up week doesn't change an algorithm. If it did, the algorithm would be worth nothing. Right? Every big up week, I'm going to go buy the market. That doesn't make any sense. So for the ARMR report, one of the major components that changes the risk monitor from green to red, red to green, is a confluence of events where all the indexes behave the same. It's so important because that's the footprint of big institutional investing. If you want to understand, what the algorithms are all about, they're really designed to help us get insight into what institutional money is doing. Okay, we can do that through monitoring volume, which we'll get to that in a minute. Okay, so when markets go up or down, depending on the type of volume that comes with it, it tells you if there's distribution or accumulation. Okay, so we'll talk about that in a minute. But from the standpoint of the ARMR algorithms and the risk monitor, what we believe, what we've seen doing extensive research that I'm sharing with you, is that the best entry points in the market occur when all the indexes behave in a similar manner. And what we're getting right now are indexes doing dramatically different things. So let's go look at what I'm saying. There's 7 indexes we follow. We have algos written for each of the 7 indexes, and then we combine all 7 to get a readout that tells us red, green, or yellow. Okay, so we're still red, and here's why. Let me show you what it looks like. So the big index, the S&P, is in an uptrend. It's closer to the top of the channel than the bottom. It's kind of up here, and it looks like it's about to break out next week. It can easily lift all the way to the top of this channel, no doubt about it. Okay, we can look at the triple Qs. This is QLD, twice the Qs. Okay, and they're doing the same, pretty much the same thing. Nice run off the lows. And it's that we got risk on green right here, rallied up. This reversal turned us yellow. The breakdown turned us red. Haven't changed that. Now let's go look at the small cap index. Okay, this is an index. So the top 4 indexes we follow: small cap, Dow, S&P, and NASDAQ. Small cap, to me, it will be, it always will be, it has been, it always will be the canary in the coal mine. Now I'm going to show you 3 canaries that we follow that give us advanced warning of general stock market movement. The first is always the small cap index. It doesn't correlate day to day, second to second, okay? But over time, when you get a top that forms like this in small caps, so you're getting a big top in small caps, complete with a breakout that failed, okay? Meanwhile, the S&P and the NASDAQ are doing this. This is showing you a hollowing out of the market. What's driving the S&P and the NASDAQ are the following handful of stocks. Apple, skyrocketing, looks great. Google, nothing wrong with that chart. Microsoft, hitting new highs. Almost hitting new highs. Tesla. Go look at the amount of impact that these names have on the S&P. Now that looks like it's at a key turning point, right? Tesla breaks below 1,000, that's going to have a major drag on the S&P. But if it makes a nice little bottom here at the 50-day moving average and rips towards the highs, market's going higher. And like the last piece to that puzzle out of those names probably is NVIDIA. Okay. Those 4, 5, 6 names drive the big indexes. So what's happening is we have a narrowing of the market. Fewer and fewer and fewer names dragging the big indexes higher, while a stealth bear market goes on underneath. And we see that stealth by looking at the top that's formed in small caps that I just showed you. Okay. By looking at the IBD 50 and Innovator Index that you can see has been putting on a top all the way back since February, and then put in an unbelievable double top right here. Right. And then of course, we could just go through the ARK funds. And I'm not picking on Kathy Wood. I mean, you could choose any innovator fund. They're all going to look like this. But this move from here to here is a 40% decline. So while the S&P is up 25% for the year, there's a 40% decline going on inside the year in leading innovative stocks. Okay, and every week, one after another seems to come crashing down. Names that you would say to me, we've missed it. We're never going to get it. It's gone to the moon. It'll never come back. Really? We're going to look at a couple in a second. They're coming right back down to and through key entry points. But just looking at the ARK funds or ARKG, this is just genomic revolution. I mean, it looks like revolution's over. Okay. I say that tongue in cheek, right? How about the fintech? Fintech stocks are imploding. So when I say there's a stealth bear market on, you could see massive destruction in parts of the market while the indexes levitate, the big indexes. And they levitate because a handful of names are attracting all the capital. So to wrap up this thought, I don't sit here and make predictions to you that stop me from executing, right? So I always try to say to you, we read and we act. If the risk monitor goes green next week, I'll put money to work, okay? But all of these things that I'm showing you are telling me a couple things. Number one, the risk monitor may not go green. The market could levitate to the end of the year. The risk monitor won't go green because there's no confluence and there's massive destruction under the market. That has been in the past typically a setup that leads to a significant correction in the market. Okay, so let's say the risk monitor goes green. If it does, all of this destruction will get me to put on conservative positions. This will not be a time to use margin. It won't be a time to add every name in my on my whiteboard. It'll be a time to focus on indexes, on big cap stocks that are attracting capital, that have nice chart patterns. We'll go over a couple. But it won't be a time to get wildly aggressive like last year in March when the market bottomed and we were getting wildly aggressive there. This won't be that time. So even if we go green, it's going to be a much more muted response for the ARMR report. Okay. In my experience, I've never seen a market suffer this type of destruction in leading technology names that doesn't eventually draw the market down. Now, I know this time's different. Everyone loves to tell me that this time's different, right? Bitcoin was 66, 67,000. Everyone told me this time's different. It's going to go right to 100,000, right? They put talking heads on CNBC that tell you it's going to go to the moon. It's going to end at 100,000 by the end of the year, right? They don't know what they're talking about. Bitcoin's sub 50,000. Okay. So just spare me the prognosticators on television that are talking their book. They already have a big position in Bitcoin. So why not come on CNBC and tell everybody it's going to 100,000? I mean, it's a complete waste of time and it doesn't make anybody money. So let's just put that over there. Okay. This time won't be any different. What we have is a Fed threatening, that's a key word, to taper and raise interest rates. Now, at the moment, we don't see that actually happening. They're not tapering right now. If you look at the government data, They say they're going to taper. Theoretically, next week, they're going to increase the taper. But until they literally start draining liquidity out of the system, I won't believe it. So we're at a major crossroads in the market. Stealth bear market or the leaders dragging the whole market up. I don't know which it's going to be. It's still risk monitor red. Even if it goes green, I'll be more cautious. There are periods of time when the market levitates without the ARMR report changing to green. That's because the market's getting more and more narrow and there's no confluence. So I'm patient and I wait for my opportunities because they always come. Now let's get to that discussion. Okay, here are some of my favorite names on the whiteboard. Names that I thought I'd never see at these prices again. Totally missed. Remember Coinbase? Remember Coinbase? Totally missed it. I missed it. Right? Right here was the earnings announcement. It was a total blowout. Stock went to the moon. Now, if you're a person that was a swing trader on that trade, you killed it. And I want to give you, if I had a little emoji right now, it'd be one of those, gold medals for you. Well done. You traded that very quick swing trade. But for the rest of you out there who are investing and tell me this is the greatest idea ever and the crypto only goes up, this is just a reality check for you because the market's going to do this to you over and over and over again until you learn the lesson. Okay. Stop losses have to be used. I don't care about certain individuals who happen to love watching the ARMR report and complain that I use stop losses. That individual doesn't make any sense to me, right? That individual only shares information about stocks he makes money on and pretends that everything he buys goes up. Those people, I love them, and I love when they watch, and more power to them. I'm so enthusiastic that they've discovered a strategy where they only buy stocks that go up, and those stocks only go up all the time. I love those people, and well done. I'm so happy you've discovered how to do that. But for the rest of us in the real world, you've got to protect your assets by using stop losses so that you don't suffer a round trip like this. Now, when I see a round trip like that, I jump on the conference calls with earnings. I start digging through the balance sheet, the income statement, and I get myself ready to buy the stock. Okay. Coinbase, and you want to get a pen and piece of paper. You can write this down. These are a couple of names that are at the top of the ARMR whiteboard. All right. And for those of you who are, new to this process, the ARMR report looks like this, and you can click on ARMR Insiders once you become an ARMR Insider. Okay. And we have basically 4 tiles across the top that give you all the information you need to know. The risk monitor and the color, the videos, these are exclusive videos. We do them every morning, 8:30 in the morning meeting. And then on afternoons where it's necessary, we do an in-game update, and they're always going to be here on the website. Here's the whiteboard, and you click on that tile and you jump down into the whiteboard, okay? And you're going to find out what are the themes we have an interest in owning in 2022. And that whiteboard's constantly changing, but I'll tell you right now some of the themes. So grab a pen and paper, write this down. We want to own metaverse stocks. We want to own 5G companies focused really on the semiconductor names that benefit from that rollout. We want to own the ad spend companies that are benefiting from the transition. It's really a paradigmatic shift in how people watch TV, okay, from the tethered linear approach to all the different ways we watch TV now. And that's driving a particular and an important shift in advertising. And there's some companies that are just going to dominate that space and should make a lot of money over the next 3 to 5 to 10 years. Okay, so that's at the top of our whiteboard. Quantum computing, it's real early there, but we're doing research now so we know what companies are at the forefront looking to own those names. So I think cybersecurity is a name again for 2022. Hard to determine which names to focus on. There's so many. Quite frankly, I'd love to see consolidation in the space. But there's a couple of leaders and we can go over them. So those are some of the topics. Did you think I forgot cannabis? Come on now. Come on. There's no way I forgot cannabis. We're going to get to the cannabis couch in a minute, because if there's ever a time to kick back on that couch and relax, it's right now. And I'm going to talk to you about that in a minute. But looking at Coinbase, what we do in markets like this where leaders get destroyed, and come right down into bases, that's the time to do the research. And after doing the research this week on Coinbase, we know this is a stock we want to own. We elevate it to the very top of our whiteboard. Okay. Just to share with you the stealth bear market, take a look at what's happening to Bitcoin mining companies, crypto mining companies in general. So here's a breakout in crypto mining that is completely reversed. The winter is coming for crypto. Okay. And it's not a bad thing. It's not a bad thing. It doesn't mean crypto's over. It means we're going to get some really great prices on some quality companies. I personally don't want to focus on the mining stocks. I want to focus on companies that benefit from the crypto revolution in many different ways and have revenue streams that touch many different parts of the crypto universe. Coinbase is one of the best ways to express that. And then find companies that look like Coinbase that are doing interesting things. Here's an example of that. After getting on the conference call and digging on, gathering information on, I can't stand SPACs, okay? So this was a SPAC, and so the stock goes like this, and then the stock collapses. And so I hate SPACs because of I think this type of hysteria just locks people in, then they get destroyed. And most of the time, just the SPAC is a terrible idea. But and if you don't believe me, just look at all the SPACs out there. I know, oh, they were so much fun for a while. And unless you traded that ridiculously aggressive move in the first 2 weeks of the trade, you're stuck with like a terrible looking portfolio. I mean, whatever happened to SPCE? I haven't looked. I could be putting my foot in my mouth right now. Oh, there's SPCE, right? Oh, this was the greatest idea ever. Virgin Galactic SPAC. Oh, we're just, straight down. Okay, I'm not even sure that was a SPAC. But my point is, I generally stay away from SPACs. But when I did the research, because an ARMR Insider brought this to my attention, and one who I respect, and so I did some work on it. This is a great company that touches the crypto revolution in a very interesting way. So it's on my whiteboard. All right. So these are the type of names we try to uncover, put on our whiteboard, wait for weakness, put positions on. So let me just rattle off for you a couple more names that I have elevated to the top of my whiteboard and I'm waiting to position when we have weakness. So I talked about crypto. Let's talk about the metaverse. Okay. And this is probably not new to you if you know the metaverse, but Roblox is my favorite idea there. Right. So where we own Roblox right here. So we bought it, the gapped up, pulled back, we paid $95 a share for it. And we're still on that trade. I really would like to triple, quadruple my position size in Roblox. So I'm probably not selling this. I'm letting it going to do all this kind of craziness. I hope it makes a higher low. And when it does, I'm going to dramatically increase my Roblox position. Unity, here's a stock that I thought I totally missed. But I would like to share with you an ARMR, really an ARMR go-to target that works all the time for me. And that is this teal line up here, this light blue line. This is the fourth standard deviation above the 200-day moving average. That's what this is. And I can't tell you how many times a stock will stop its run at the fourth standard deviation line above the 200-day. So when you have a position on and it absolutely skyrockets to that level, it just makes sense booking the profit, booking a partial profit, and trading around the core depending on the type of investor you are. If you want another example of that, let's take a look at AMD because it's classic. AMD broke out, went right to it, took 3 months to consolidate, broke out again. It's gone right to it. Now, sometimes it goes a little higher. This is not a guaranteed top tick, but it tells you that the initial surge is over and the stock's already trading below that price now. Okay, so this happens repeatedly, and you might want to put that down, write it down in your trading log, and consider incorporating that into how you trade. My goal for 2022, I look at, and I suggest you all do this, I look at my trading activity in the last 6 to 12 months and try to isolate what I'm doing wrong so I don't repeat it next year, and isolate what I'm doing right and put more capital that way. And I can tell you what What I'm really trying to do in 2022 is identify these leaders, wait for these vicious sell-offs, get the trade on right. When it rips higher, book probably 50% of the gains, and then carry that 50% as a core position and try to let it run as long as I can. Okay, example. I'm doing that already in Roblox. I'm doing it in Pfizer. Okay, I own Pfizer. We all, anybody on the ARMR report owns Pfizer down here. Ran right up to the 4th standard deviation. You can see it climbed up right here, right? We booked some profits here. It cratered, turned around, ripped higher again. Now, I should have been buying it down here. I didn't do it. I didn't double the position. I should have. So I've got a core position on that keeps going up. I'm collecting a 4.3% yield on the dividend. And I intend to hold this thing as long as possible and buy weakness. Like the next time it comes in, sets up a base, I'm just going to add to that position. So one thing I'm trying to do in 2022 is identify fewer names, trade less names, trade bigger position sizes. When they explode, book some of that excess and then carry a core position as long as possible. That's my goal. I'm curious to know what your goals might be. You could think about them, get back to me by the end of the year. All right, so Metaverse, Unity. I can't wait to add it. I can't wait to add Unity. I'm just looking day after day after day. I wait for a bottom to set up that I can buy on Unity. I want to increase my roadblocks. I think anybody doing the work realizes that NVIDIA is a clear Metaverse stock along with everything else. So I'd love to get a position back on in that position. How about Cloudflare? This seems to be a Metaverse stock. I know it looks like it's a cybersecurity company, and it is, but I think it could also be part of that Metaverse that we should pay attention to. So those are a couple of names, and just for the fun of it, I have this name on my list. Okay, Super League Gaming. Okay, you heard it here first, SLGG. I'm not buying it yet, okay, but I think this stock could be a huge stock in 2022, and I'll keep reminding you of that. And certainly, ARMR Insiders, when we buy it, you all will know. We'll add it to the ARMR portfolios. But if you don't know about this company, it's time to do the research now into the end of December, so you're ready to move if it fits your risk profile and it starts to go in the right direction. Wanted to just touch on a couple of what I call data mining. Everybody calls data mining / the ad business. Okay, what I'm talking about in the ad revolution, Trade Desk is at the very front of it. So TTD has got to be at the top of my list. That's a major whiteboard name right there. And after doing the work on snow, I think Snowflake's got to be on the list. And I love this pattern. This is a new issue everyone loved, makes this huge cup. Now it's building a handle, some type of a base there. I'm going to want to own this stock. And let's round it out with shares of Zoom Info. I've been watching Zoom Info for a long time, been on the conference calls for a while. You had that cup and handle breakout, pull back right to this base. So notice how what I'm looking at, what's at the top, I tell you stocks to watch, the top of my list. I'm not telling you stocks that are skyrocketing. How does that help anybody? We're just going to pile into a Momo trade? That doesn't work. Okay, what we want to do is find quality companies that have open-ended growth potential. Wait for them to get destroyed. Don't catch a falling knife. Let them get destroyed and start to set up higher lows and double bottoms. So let's jump onto the cannabis couch, and then I'm going to wrap this up and start getting to your questions. Okay, because that comment about buying stocks that have been destroyed doesn't get any better than the cannabis couch. All right. So I think cannabis has a massive potential. You guys know this. I've been talking about this. And yet, for most of 2021, I haven't owned these stocks. We've tried a couple of entry points. We've lost some money, gone back to cash. We tried an entry point here or there, made some quick money, went back to cash. I've been saying for the last X amount of weeks, and I'm going to pound the table again today. I think these U.S. cannabis names are bottoming right in here. I think the tax loss selling is coming to an end. We'll know that when we start to see higher lows set in. And this is what I really find most compelling. Take a look at what's going on in U.S. cannabis as shown to you by MSOS. That's the simplest way to take a look at it. Okay. So briefly made a new low, but now has popped above that low. So it's really holding this level, which was the original breakout when everyone thought Democrats would do something smart for cannabis, which anybody who thought a politician would do anything smart is obviously, doesn't understand, politics. Okay. So they haven't done anything smart, and it's completely unwound. The time to own cannabis names is when nobody thinks that the government will do anything right. The time to own cannabis is when all of the excitement and expectation about possible safe banking included in the NDAA baloney, okay, that was never going to happen, okay? It was never going to happen. We all know that. We love cannabis, so we pretended it might happen, but we knew it was going to get cut. Okay? So it's cut. Now nobody thinks anybody's going to do anything right in DC. There's no expectations in these stocks that there's about to be an announcement that's going to really help them out. And that's the time to own them. When all of that excitement expectations are washed out. Meanwhile, they keep coining money. The business keeps growing, and they keep making a fortune. And the states continue to fall in line. There'll be more states in 2022 that go medical or recreational that allow these businesses to continue to grow their business at a rapid rate. That's what's happening. And at some point, there'll be legislation. The idea is to own the names before everybody starts talking about legislation. Because once they pop on the excitement of legislation, you can't buy them. You got to own them down here. All right. So I'm looking for the bottom. But look at this. Look at MSOS making a not quite a higher low. It made a new low, but it stayed above that low that we see back in November. Look at what's going on in MJ. That is just a disaster of epic proportions. I mean, the Canadian cannabis market, the stocks look god awful. But what I take from this is a very interesting and I wish I could do. Let me do something here. Hold on a second. Let's look at them side by side. Going back to November. So here's November. Whoops. Here's November in Canadian cannabis, which has plummeted to new lows. And here's November in US cannabis, which is holding the lows. So we've always said that US cannabis names are really the place to invest when it comes to cannabis. And now we're starting to see the split. And I wonder if that can sustain itself. You know, does MJ just drag MSOS down to new lows? I guess it could, it might. But I find it very compelling that we're starting to get a separation. People are starting to recognize there's more value over here. So anyway, those are my thoughts on cannabis. It's getting close to the time to begin building up that position. Those are my thoughts. And if you want to just take a look at the top names, which is always a good thing to do in the space, you could just go take a look at, like, let's go look at TrueLeaf, setting up a big base there. Now it could break to a new low, and it's possible. Or this is setting up a base since, August, September. The leaders should start to lead. Looks like a double bottom and green thumb. I don't think Curaleaf looks as good, but let's take a look. Not quite. That's still in a straight downtrend. What about Columbia Care? Trying to bottom. Some of these things are trying to bottom. And of course, my favorite way to play is Agrify, but that's a tiny small cap stock. So I'm not buying Agrify in this market. I need to start making money in MSOS first. And then I might, look to branch out into some of the smaller names. So anyway, those are my thoughts today. I hope you find them helpful. To wrap up what we'll be doing next week, what are our views for next week? We're going to be trading the indexes. If we somehow get risk monitor green, we will change. I do want to tell you, though, that the volume behavior in the market has been very negative. Even as the market goes higher, most of your down days in the last couple of months are on larger volume than your up days. And that tells you that institutions, and I'm just going to see if we can see it. So what I'm showing you right here is, if you look right there, these volume spikes here, this is volume down here. These volume spikes here, these volume spikes here, those are all volume spikes on sell-offs, which means really distribution from big institutions. And then you get the market levitates higher based on gamma flows and all that kind of stuff, but no real buying coming in. So that's what makes the market kind of, walking on thin ice to me, being hollowed out underneath. Huge collapses in leadership technology names, but the market edges higher, edges higher. Big volume spikes on down weeks, and then the market edges higher on light volume. That generally doesn't end well. And you can understand why the risk monitor is still red. It could change. If it does, I will certainly put some capital to work, but I'll do it in a more conservative way. So let's get to your questions now. Thanks for spending time with me. Future of GrowGen. Future of GrowGen. Tech Monkey, how are you? Glad to see you. I missed you guys. I was off the desk for, I guess, a week there, and I always miss our chats. That's just a god-awful chart, isn't it? But here's what I can say, Deb. I've never liked the management team of GrowGen. I haven't been shy about telling everybody that. I certainly, missed that run from here to here. I made a lot of money on GrowGen early, and then I missed that last run because I don't like the management team. And now the stock is all the way back down to basically where I originally sold it. So here's another example of, oh, we've missed it, it'll never come back, and it just comes right back. So using stop losses and protecting capital is key, no matter how great you think an idea is. If you told me that the management team of GrowGen was changing and they were bringing in some real heavyweights, I would get real bullish on the stock because I think what they're doing makes sense. But it's just not my favorite name. And at the moment, if you listen to the last couple conference calls, they have some real problems that they're trying to work out. And I'm not confident their management team can do it. I'm really not. And so I'm going to avoid that stock. Take a look at General Dynamics. General Dynamics looks interesting. I'd have to go do some research. What's the story there, Erez? And Erez, nice to see you. Glad you could join us. Thanks for being here. Honestly, Erez, the defense stock I like the most is always Lockheed Martin, even though it's wildly underperforming and had some terrible moves here. But they're at the forefront of quantum computing along with their defense initiatives. So, and I think there's a solid dividend there. I don't know. I have to take a look at that. I can't remember exactly. That chart looks god awful too. So I have to find out why you like General Dynamics. Certainly the chart pattern doesn't look terrible. It came down to the 200-day, touched and bounced off of it. What else do we like in that space? I have to look at the other names. Certainly, I guess, I don't know, Boeing's a defense name. That's not going anywhere. That's more airline. I don't know. I'll have to look at that one, okay? We'll do some work together on the trading desk next week. Maybe we'll listen to a conference call and try to glean some information. Nokia. Oh, yeah, look at Nokia trying to break out. All right, I'm going to put that on my list to do some more work on Nokia. Put that on the list again. That looks like a really good entry point. I'm going to give you a thumbs up on that one if I had a little way to do an emoji there. Nice to see you, Dennis. Thanks for joining. Nokia looks really good. That chart pattern looks really good. Raymond, how are you, Raymond? Talking, yeah. Round Hill Metaverse. Yeah, I looked at the ETF on Metaverse. I think there's too many things in there that aren't pure Metaverse to me. So I think we could do a better job, and I know you can do a better job, Raymond, at building a Metaverse portfolio on your own, as opposed to this ETF. But AVGO, you've hit on one of my greatest dividend investments, maybe of all time. So let's just go over the dividend portfolio for a second. I'm glad you brought this up because it's another. We have four ARMR portfolios that we share. ARMR 1 is really geared towards innovative type of stocks off of the whiteboard. ARMR 2 is focused primarily using algorithms and trading indexes and day trading. And I guess there's three. ARMR 3 is the index only portfolio, and that literally just buys the 7 indexes and sells the 7 indexes using the algorithm. And then we have our dividend portfolio. And I just started sharing my dividend information because it's totally different than how I run money. Okay. It's almost more a Raymond style of investing. I try to pick off high dividend paying stocks when they're cheap, when they've gone through a sell off, they've gotten destroyed so that the yield pops up. If I think the dividend is money good, if they've got the cash flow to cover the dividend, I'll put that stock away and I'll use a very lenient stop loss. In fact, I look more at the whole net worth of that portfolio as a stop than I do one particular name. So, and I also use weekly stops. I don't use any kind of intra-week stop. It has to really be an awful week that takes me below a stop to get me out of the position. And if I think that weakness fundamentally has come from something transitory, I might double the position. Okay, so it's totally different than the ARMR investing way, and that's why up until the last couple of months I haven't shared this information because I don't want to confuse you guys. But for my personal capital, I have a whole portfolio where all I do is load up dividend stocks, and this is the reason why. So I bought after this collapse in the market. All of a sudden, Broadcom had a yield of I think 4% is what I captured somewhere in here. And I've just held the stock all the way through all of these shenanigans. I haven't sold it at all. And I'm not selling it now just because it's trading at the 4th standard deviation above the 200-day. I'm not trading it because I just keep collecting this yield that keeps going higher as management keeps increasing the dividend. So my top 3 investments in 2021 that are dividend related are innovative. If you guys remember, I did a YouTube video about this in 1999, and I said innovative properties would be the single best way to play cannabis going forward. And you can go find that video on YouTube. It was somewhere around actually the December 31st of 2019. I said it's the single best way to play cannabis. I mean, I've been right a lot in my past, and I've been wrong too, but I've never been more right than this when you look at what this stock has done and what the rest of the cannabis space has done. So this dividend, they just keep raising the dividend, and I don't sell the stock. I just don't sell the stock. And of course, the other name is Pfizer. Those are my top 3 dividend positions for the year this year. Now, I've got other names that I'm adding now. And by the way, I've got some dividend names that have lost money this year. I don't care. I look at the whole portfolio. Obviously, these 3 have carried all the other positions that might have some smaller losses. Meanwhile, the whole portfolio is capturing somewhere around 5, maybe a 5.5% yield. That's the sweet spot for me. So I don't reach for 10% yields because usually those yields are fake. The dividend is dangerous, probably is going to get cut. I don't reach for dividends that are high if I think that the cash flow can't cover it. Right. So I look for 4 to 6%. Sometimes you get a 7%er in there. So here's a couple names I've added recently to the portfolio. Altria, right? This is a 7+% yield. I don't want to buy it up here. When the stock comes all the way back down to this downtrend and the yield pops above 7, I think it's 7.5%. To me, that's just a no-brainer. It's a massive cash flow that's going to continue, and meanwhile, the company is going through a fantastic transition towards vaping. I think maybe 5 or 10 years from now, the majority of their business is vaping at a higher margin. I mean, this could be a huge idea from a growth standpoint. In the meantime, I'm going to collect 7%. How about IBM? I know everyone loves to hate IBM. Jim Chanos says it's going to go to 0. I think Jim Chanos is smoking something, and it's not weed. Okay. IBM always disappoints on earnings. You don't buy it into earnings. You don't buy it when it's high. But when it gets wrecked after earnings, and by the way, if you listen to the earnings announcement, there's nothing horrific going on. The cash flow is coming in, paying the dividend. They're trying to turn the ship around. They have a very interesting quantum computing and blockchain part of their business that's building. Eventually, that's going to show through into the earnings and revenue statements. In the meantime, I'm going to collect a 5.5% yield. So those are a couple of ideas. Now, one that's on my list that I just can't pull the trigger on and I'm thinking about is Lumen Tech. This is a 7% yield. And the reason I haven't pulled the trigger yet is that, you know, their business keeps declining, and while they have a cash cow that they can milk and pay the dividend, the management says they're going after growth businesses. And so now the analyst community and management are at loggerheads. Management says they can fund the dividend and go after growth. Analysts think they can't do that, and they think the dividend is going to have to be cut. And so I haven't pulled the trigger yet, but at some point I might, because I do think that they'll be able to do both. I think that dividend's money good for the next couple of years at least. So I'm looking at that for an opportunity. I do like your Facebook idea, and I'm probably going to be back in Facebook at some point, but I'm not totally enthusiastic about that pattern right here, so I'm not long at the moment. All right, China. Well, okay, you can make all that money on China you want. You're going to make it without me. And so I know you commented on Twitter, and I love the Twitter banter with you. But you commented that I have to change my opinion and I have to start buying China. Now let me tell you something, Ray. I don't have to do anything. Okay, and I recommend people watching this video and any video out there. You don't have to do anything I say either. You have to figure out what fits your risk tolerance, fits your goals, and makes you comfortable. If you don't build a portfolio that you're comfortable with, you'll never manage the risk correctly. Okay? I won't buy Chinese companies. I have been unbelievably right this year as they've been destroyed. I saved a lot of people money saying that. Could they have a huge year next year? They could. I don't care. It's an opportunity cost of money. I have too many other places to go where I can invest and not care about the communist regime in China and what they may or may not do, which they do arbitrarily. So I don't disagree with you. There could be some great ideas in the EV space. It ain't going to happen with me. I hope you make a lot of money in those names. Vaya con Dios, my friend. All right. Something I wanted to maybe just think of though. Oh, here are my favorite. If I want to trade, well, this is not EV, but if I wanted to trade alternative energy, I like ENPH, which has come all the way back down after touching that 4th standard deviation line. It's coming back to the 50 days, so that's got to be on the list to watch. And SEDG. I know these aren't EV stocks. These are solar tech stocks, but I like both of those names. Okay, and I'm doing a little bit of work here on Plug Power, and don't let me forget this next week, Eras. Let's go listen to that call again, because Plug Power is coming right back down into the 200-day, and that might be something we want to focus on as well. Don't let me forget that. Shorting VIX has worked out well. Will that ever change? Shorting VIX is like playing with mercury. You know what I'm saying? It works until it doesn't, and then you get your head ripped off. It's not something that I really would ever recommend doing unless you're an aggressive trader and you're real good at it. So I generally don't trade VIX at all. I watch VIX to help me with my day trades, but I don't trade VIX. And I know XPEV. Yep, good company. Gilead. Here's an idea that's in my dividend portfolio. So I showed you some of the huge winners, and now here I am with Gilead. And I've held Gilead since that little arrow right here. It's come up, it's come all the way down. Actually, I made some money on that rally here. I booked profits in here because that was just pandemic hysteria, and we booked some gains in here. But when it came back down, I added to the position down here again because the yield popped above 5%, I think, or maybe it's 4.8%. And now the stock is in a slow, steady uptrend, and I keep collecting the dividend yield. That's a perfect name for the dividend portfolio. Hey, here's another one we've got. Don't forget AbbVie. This was an Era's favorite. And what we did here, Era's, right, is the whole thing cratered, made a double bottom at the uptrend. We added the position, and now the stock is running to all-time new highs. Not all-time, but new highs for the year. And we've locked in a dividend, for a dividend portfolio. I am Cannabis Corp. I'll have to do some work on that, Daniel. I don't know that name, but I'll get on it. UGRO and IMCC or UGRO or here's UGRO or Agrify. These stocks won't work until the bigger names start going higher. So I don't need to be early on these names. I just need to do my research so I'm ready. And if I start making money in MSOS, I can start broadening out to these other names. All right, let's talk about uranium for a minute. This is another example of a hollowing out of the market. And if you guys follow me on Twitter, it's at Brett Rosenthal. I retweeted somebody, I can't remember who it was, who posted the dramatic declines we're seeing in meme type of stocks. I mean, it's been just an unbelievable ass kicking. Okay, so the big indexes go higher, Apple goes higher, but underneath that, there's just been mass destruction. So for a while there, uranium was caught up in that meme type of behavior. And so when those stocks get crushed, they're bringing uranium down. Does it mean uranium's wrong? No, it doesn't. This is great. Bring them right down into bases, have them set up a higher low, higher high, double bottom, and I'll be more than happy to buy this group. But it takes time for these patterns to set up correctly. Okay, and so right now this pattern is no man's land, doing nothing that I would necessarily buy. I will remind you that LEU is my favorite name in the space. I mentioned that somewhere in here, and then the thing went berserk. In this case, it's been riding up the 4th standard deviation line all the way, which is crazy. Okay. Now it's come back down to the 50, and maybe it's making a base. But this is the company that makes that makes products that are in the sweet spot of where it seems the world is going when it comes to building new reactors, which are small scale reactors. And this company is at the forefront of that. So that's one of my favorite names. And of course, the CCJ is the leader. So we'll watch this closely. And when it sets up a double bottom or some type of a pattern that's buyable, I'm more than happy to get on that trade. Visa. Kevin, how are you? Nice to see you. Visa. Okay, so here's what's going on in Visa and PayPal, okay, and Square, okay, and MasterCard. If you want to understand why these stocks are being absolutely destroyed, it seems that the buy now, pay later revolution, which can be best described by this company, Affirm Holding, and even that stock has come down. But that buy now, pay later revolution is really destabilizing investors' opinions on the credit card market, okay? And some of those guys are rushing to get into the buy now, pay later, okay? Which is probably why Affirm is, the reason why Affirm is not on my whiteboard, not at the top of my whiteboard, is I don't really see the intellectual property that makes them the only ones that can execute buy now, pay later. So I think that you're going to see all the big companies, PayPal and Visa and MasterCard, they're all going to get into that space. And it's not a space where I see a high margin edge. And so it's why I don't invest in any of these names. But there's clearly a destabilization going on there. And that's why for now, I always avoid the space, but certainly there's nothing going on in that chart pattern that looks compelling to me, even though it's ripped off of the bottom. This is a major downtrend. The 50s crossed below the 200. The stocks closed below all, the key moving averages. It would take time for a bottom to form off of that, in my opinion. Do you think we're seeing distribution topping action in NVIDIA? Jason, how are you, man? Nice to see you. Thanks for all your support and Twitter. I always appreciate comments and the retweets. NVIDIA is so at the forefront of those key investment themes that I want to focus on: crypto, metaverse, that even if it is in the topping phase and I owned it, which I don't, but if I did, I would have booked a partial profit by now and I would be staying with my core, because I think that core over a long period of time could go a lot higher. And so the object is to put a position on right. And I didn't do that this year. I was much more aggressive trading. So which was detrimental to my performance this year. Hey, look, guys, I try to keep it real at the ARMR Report. I'm telling you when I'm killing it, and I tell you when I don't. Okay, that's the only way for us to have these conversations and make it worth anything. And so this year has been an underperformance year for me. It's no surprise, no secret. I trade a certain way last year that made me wildly successful. This year, not my greatest year. My whiteboard's full of innovator names. Had I not been using stop losses, this year would be an utter disaster. Okay, but so what do? Is I go forward and I try to make sure that I'm addressing weaknesses in my strategy and focusing on strengths. So clearly what I want to do, and NVIDIA would have been a perfect example of this, is to own this position down here, which we did. I think we put the trade on, maybe we put it on here. Can't remember exactly. I should have put it on in here. I don't think I got that. I think Era's got that. I think I was in here. I can't remember exactly. Anyway, when this thing skyrocketed, I booked my whole profit. But honestly, I'd like to still own some of my stock down here and just be trading around the core, right? So have that position on, use the 200-day moving average as a stop, and then trade around the core. Every time it comes down, sets up a new base, double the position. When it rips higher, swing trade that half and stay with the other half. That's my goal. And so do I see distribution and topping action? I don't really see that. This is one of the names that's been holding up the whole market. So if the whole market implodes, I guess it'll come in, but it certainly looks like it's tired and needs to do some consolidation. There's no doubt about that. But I think that's true about the whole market. Bristol Myers. Haven't looked at that. Oh, smokes. What the heck happened to Bristol Myers? What's the dividend on that now? That dividend's got to start to get interesting down there. Let's put that on the list. I got to go figure out why that stock looks so bad. But let's see if that if whatever's happened is blowing over, and we could take these lines off the chart because clearly that was a failure. So let's see what's going on, and if it makes a bottom down here and the yield is somewhere close to 4%, I'd be happy to put that trade on. Wow, Gladstone Land, that looks really, like a screamer. So when you say, could I chart it, what is your question there? I mean, do you want to share with us that you bought it cheap and it's skyrocketing, in which case, congratulations, well done. It's a REIT that owns 137 farms, which is a brilliant idea. The yield is about 2%, and there's nothing I would necessarily do. I certainly wouldn't buy the stock up here. But that entry point right here would have been nice. The yield was probably closer to, I don't know, 3%, 2.5%. Now that looks great. And this brings me to my focus on Deere. So I'm not buying land up here, but I do think that Deere is a no-brainer. There's a technology revolution going on inside of Deere that's driving their bookings, which are at record levels. So they're going to have another big year in 2022. And they've gotten past their labor dispute. And when this thing breaks out of this pennant, we're going to want to be all over the stock. And I think it's benefiting from that chart you just looked at in land. So I put deer on the top of the list. You want to look at Merck? I think you're looking at Merck, right? MRK. So Merck had that ridiculous blowout on news that they have a cure for, for COVID. And the stock has imploded. This is not a big surprise, but maybe that's, maybe Bristol Myers and Merck on this extreme weakness with dividends, popping up are getting close to points at which we could buy them. So assuming Merck is what you were talking about, that's an interesting idea. You weren't talking about MRCK, were you? No, there's no such thing. So I think you're talking about Merck. Hey, by the way, didn't we talk about a couple weeks ago when the whole omni blah, 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 next virus part of the pandemic baloney, and everyone was so scared about it. And I sat right, I don't know if I was, maybe I wasn't doing a video because I wasn't here last week, but I was sharing with all the ARMR insiders, all that I'm reading is telling us that this new variant is more mild. What is everybody getting upset about, right? And now I saw on Friday, the CDC comes out and says, apparently it's more mild, you get a runny nose, and a cough. I mean, in other words, it's exactly like every other cold virus. Can we just put this to bed already? The draconian measures that are going on in some states and some countries is mind-boggling to me and is very disturbing. But we'll save that for another day. Any other questions? If not, guys, this has been lots of fun. Oh, you want to say? Okay, let's take a look. Any other questions? If you've got them, I will. I'm happy to answer. So there's land, and it's the only time it touched it was right here, which led to a consolidation of a few months back to the 50-day, and then it took off again. And this is, look, Raymond, as with all these lines on charts, it doesn't have to be an exact touch. So what I would say right here, when it ran up to that price right there, you can see a perfect doji stone. Maybe if I blow it up, it's a little more clear. See, that is a perfect doji stone that got close to. It doesn't have to touch it, but it's close enough where the doji stone tells you the stock is done for now. And then, of course, it just consolidated. I guess that was back in May. So it consolidated from May to November and then broke out all over again. But you'd have to get somewhere up into the 34, 35 area for that to touch the fourth standard deviation. Yeah, you bought it in 2016. I mean, that's great. You were probably picking up a nice dividend, and so I don't talk about it a lot, but I do have a portfolio personally where all I do is look to pick off dividend payers in themes that I like and then hold them as long as possible. So we're in the same boat on that. All right, guys, listen, this has been lots of fun. As always, I appreciate, I appreciate your time spent with me. If you're not a subscriber, consider subscribing it. If you've liked this conversation, I appreciate it. To hit that like button, I guess it helps me out. No, who knows? But I'll be here again next week at same time, same station, and we'll do it all over again. All right. Have a great weekend, everybody.